Alright, hello and welcome to Camel Finance. I'm your boy Camel, and it is going to hit 33 degrees later today, which is unusual for the UK. That's 91 Fahrenheit for all of you Fahrenheit people. So this is actually unusual for the UK. We are approaching temperatures equivalent to that in Uzbekistan. So that is unusual, as I said. Speaking of Uzbekistan, they have blocked access to FTX and Binance. Payment startup Strike has launched a Visa card to give real-world returns. So what we are seeing is Visa integrate with the Lightning Network. Strike, a digital currency-based payment protocol built on the Lightning Network, has announced the launch of a new payment card from financial giant Visa that will help users earn real rewards. So this is continued adoption. Once I saw this, it reminded me of a Tim Draper talk that I saw many years ago where he was saying that he doesn't want to sell his Bitcoin because he thinks eventually you're going to be able to spend it. And whilst I went looking for that clip, I found this, which I thought was even better. So I'll play you this now.
What are you trying to bet me?
I'll bet you a nickel. 4 years from today, whether or not Starbucks is using Bitcoin, I'll say no, and I presume you'd say yes.
In 4 years?
You said 4 years.
You think Starbucks won't accept Bitcoin
Yes,
in
and
4 years?
and I am betting you a nickel.
You are out of your mind.
Sean, our producer, is here. We have bet a nickel, and we should send it to a charity.
Totally out of his mind.
Okay,
So this was back in 2019, and of course in November of 2021, Starbucks Bitcoin. To add even more ways to pay, Starbucks now lets customers pay directly with Bitcoin thanks to a partnership with digital wallet provider Bakkt. So there you have it. Speaking of adoption, 3/4 of institutions are going to use crypto in the next 3 years, according to Ripple. So Ripple's new value report on enterprise crypto and blockchain highlights NFTs, blockchain, and CBDC utility in business settings. So I think what we're doing is slowly approaching the chasm, only to then cross the chasm and start to push our way onto the parabolic portion of the S-curve. BlackRock has said that central banks now have an easy way to invest in Bitcoin, and of course they do through BlackRock. So this is continued adoption, even at the institutional level. And Tony Saramucci says that BlackRock's Bitcoin Trust will create a demand shock. There's still only 21 million Bitcoin, of course, and this number will never change. Saramucci also said that if Bitcoin goes to 300k a coin, it won't matter whether you bought 20k or 60k. But it's when, isn't it? Not if, it's when Bitcoin goes to 300k. In other news, Tornado Cash has joined the club of the blacklisted companies in the US, and this has started to progress now because the Dutch have detained a man that they suspect to be the developer of the crypto mixer Tornado Cash. And this kind of sets a nasty precedent because if you can arrest people for open source software, then I'm not sure what the implications of that sounds a lot like a tyranny, doesn't it? What's worse is that this guy was blocked from using the official Aave front end because somebody sent 0.1 ETH to his address via Tornado Cash. So I already covered on this channel that somebody took this opportunity to start trolling and send a bunch of publicly doxed ETH wallets, Tornado Cashed ETH, meaning that all of those people were technically in possession of ETH that had been sent through a blacklisted mixer. And apparently this is having real world knock-on effects where people are getting banned from using actual front-end services because they have received Tornado Cashed ETH. And of course there's nothing you can do. If somebody decides to Tornado Cash some ETH and send it to your wallet, like what do you do about it, right? Like you can't prevent somebody doing that. So this whole thing is kind of turning into a mess. And of course, the main reason for them not wanting to have people use Tornado Cash or any kind of mixer is because they don't want you to have any privacy. And so whilst we're on this talk about privacy, let me show you the dark side of CBDCs. Pay attention to this, because crypto can be used for technological good or pure evil.
Right. But you can implement it with a digital currency. This is the hidden agenda, but they got to do two things. One, roll out the CBDC, which they're doing, and get rid of cash. Those two things will go hand in hand. But we will end up worse than Communist China. In Communist China, if you're on the bad list, you can't, it's a social credit score. Yeah. You can't buy a plane ticket. You can't buy a train ticket. You can't pay for your kid to go to a good school. because you're on the blacklist
naughty list,
because
yeah.
you did something on social media that said Xi Jinping looks like Winnie the Pooh, which he does. But that's
we're recording this.
But that's I say this on Twitter, so that's okay. But that's what we're getting to. That's the dark side of central bank digital currencies. But it's the real side. It's the real hidden agenda.
And that's why every single time Jay Powell is prompted in front of Congress, the Republican Jay Powell says, "We'll get back to you.
Yeah.
We're studying that. We're taking commentary."
That is to come, and they've already told us that the CBDCs will be live by the end of 2024, and by early 2025 they expect every single bank worldwide to be using CBDCs. So you better exit the system soon if you haven't already. Commodities may still have a further way to fall according to the fair value estimate, and this is coming from the head of macro research at GMI, which is Raoul Paul's GMI. So you can see that the blue and the white line, for the white line being the commodity spot index and the GMI fair value, this is their model. You can see that most of the time these lines are tracing each other, but we've got some divergence here which tells us that the commodity spot index may have a way to go. So if you're watching yesterday's video, I showed that oil looked to be breaking out of a downward sloping wedge. However, I said that I don't want to take any positions because weekend risk and it's Friday and all of that. So I'd come back on Monday, and looking at this now, it may well indicate that that is a false breakout for oil. So I'll continue to monitor and update as appropriate. The McClellan oscillator has fired up once again, indicating strong momentum behind the underlying breadth of the market. So as the equities, as the S&P continues to thrust upwards along with the Nasdaq and the Dow, the McClellan oscillator is showing that there is a lot of momentum behind this move, and that we might actually still have a couple of weeks of rally left in this, which is what I've been calling for as well. Just a little reminder with the Ethereum is very, very hyped at the moment. It's trending all over Twitter. And just a reminder for you, the Ethereum Foundation have said the merge target date is September the 15th. But this estimate might have even a week of error. So just something to be aware of. I found this, and I really thought this sets the tone for Ethereum. Vitalik tweeted, "The terminal total difficulty has been set to this. This means the Ethereum proof of work network now has a roughly fixed number of hashes left to mine." And they've got this thing here which predicts the merge will happen around September the 15th, though that exact date depends on the hash rate. But Neil Jacobs points out something. Their leader has spoken. Imagine how comfortable you'd feel holding Bitcoin if Satoshi could pop up. He's going to make a modification to the protocol. I mean, this is not okay, and this is not decentralized. Like, perhaps the miners are distributed in a decentralized manner, but the fact that somebody, the leader, can come out and be a leader tells you that this is a problematic coin. Now, that's not to say I'm hating on ETH. I'm just kind of trying to be real about this. I've been publicly long ETH all the way through the past 32 days. I think 32, 31. We are coming up to the first take profit target. The question is, though, are we just going to break out and go? So you know my plan. If you don't, go back and watch yesterday's video. I'm noticing MATIC breaking out over $1, so that's really nice to see. I wonder how high we can go. Possibly a couple of weeks left in this, and just quickly, but there's probably a couple of weeks left in this as well. So unless we get rejected off of this downward sloping trend line for the equities, I would expect this to bounce. So a lot of people are probably going to start FOMOing in over the next couple of weeks, and that will drive price up. And then once everyone's in, we can expect that breakdown. But that remains to be seen. If you're not subscribed already, help me get to 100. We're getting really, really close now. So thank you to everyone that is subscribed. Thank you to everyone that likes and comments and interacts. I really appreciate that. Drop a like if you like what you saw, and I'll be back tomorrow with more daily content. So until then, take care from me. All the best. Cheers.